So what the hell? Bitcoin is supposed to be over 150,000 by now. Instead, it's selling off along with all the other cryptos. So let's talk about it. This is the Hey Ed YouTube channel. I'm your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. All right, let's get right to it, okay? So what the heck is going on with the market right now? It was just a couple months ago where everyone was convinced that Bitcoin was going to be over $150,000 by now. But instead, all of the financial markets, especially cryptos, have really taken it on the chin. And I promise you, I know for a fact that a lot of traders are toast. They're gone. They have been destroyed. And a lot of other traders are in the process of being destroyed. So let's start by taking a look at where the fear index is at the moment. The fear and greed index. Yes, this is a real thing, okay, guys? Right now, the official fear and greed index is flashing 10. It is at the extreme fear level. And here's another graphic of that same fear index. So you will see that at the moment, the markets are fearful. This is like a sum total of social media posts and surveys by investors and traders. And it is a way of kind of gauging the attitude toward the markets. Well, it's pretty self-explanatory, right? Now, the theory is that you actually want to get involved in the markets when people are fearful. That's supposed to be the time to get in. But is it really time quite yet? Now, when I was a trading instructor, I started the class by talking about the difference between trading and investing. There's a very distinct difference between thinking like a trader and thinking like an investor. And this is why most people fail at trading, because for most people, it is a very difficult leap to thinking like an investor to thinking like a trader. Now, as I've spoken about in many of my other videos, the markets are dominated by emotion. Fundamentals are really, a secondary consideration, because in the end, all markets are made up of human beings, okay? And human beings are emotional creatures. And the three emotions that drive every market are fear, complacency, and greed. Those are the three emotions that drive every market. And of those three emotions, by far, the more dominant emotion is fear. And professional traders know, and they take advantage of the fact that there is a cycle in the psychology of the market. Let me show you a chart of that cycle. Okay, so it starts out with optimism, then turns into excitement, and people are saying, boy, everyone's getting in, I should too. This is basically the FOMO stage, right? And then it gets thrilling, and then euphoria. I am a genius. Then things start to kind of roll over a little bit, and then anxiety creeps in. And people say to themselves, oh, this is just a temporary setback. And then there's a denial. Don't do this to me. And then fear, desperation, panic, capitulation. And right about now, people are saying to themselves, why did I do this? And then despondency, this is the bottom. Then depression. And then little hope starts to creep back in. Then this rally looks good. Then relief. Then optimism again. Now, a lot of you might be thinking that with all the damage that has been done very quickly just in the past couple of weeks, a lot of people are saying right now, well, hey, that's it. The blood is in the street. It can't get worse than this. Well, I will tell you where I think we are in this cycle. I believe that we are not even in the fear stage yet. Right now, I believe that we are in the denial stage. People are still saying, yeah, but you know what? This can't last forever. So we're between denial and fear. So although this feels like the end of the world to a lot of traders out there, I don't think we've hit bottom yet. I think there's more to come. I don't think that there is truly blood in the streets, as people say. Okay, so as you know, right now, we were supposed to have Bitcoin over $150,000, and the markets were supposed to be ripping higher. Well, there are some real causes to this sell-off. Now, as I've told you before, the crypto space is kind of a subset of the overall financial industry. And on the spectrum of financial classes to trade or invest in, cryptocurrencies reside on the extreme end of that risk spectrum. And in times of turmoil, and in times of uncertainty, and in times of fear, the first thing that people sell are the risk assets. They're the first assets to go. And although it's a separate class from the stock market and the Forex market and the commodities market, they are influenced by the other markets. Remember, this is all psychology, right? And when the big dogs are, the stock market, the bond market, and the Forex market. Those are the big ones. I mean, the entire crypto space is tiny. I mean, as of today, the entire market cap of the crypto space is $2.9 trillion. That is small. I mean, the Forex market alone does over $7 trillion a day in trading volume, to give you an idea. But the primary influence on the crypto space is the stock market. So when the stock market makes a big move in either direction, it will have an outsized influence on the crypto space. Again, because the crypto space is so tiny, it's far more sensitive. And it's much easier to push around. And let's take a look at what's been happening in the stock market. Okay, so it is important for me to let you know that I'm recording this on Friday, February 28th, and the markets have only been open for about 45 minutes. Usually when I make market commentary, I wait until the end of the trading day, because although the markets are up 250 points right now, as I'm talking to you, we have no idea where it's going to be tomorrow. Now you're looking at this, hey, the market's up 250 points this morning. Yay! Our problems are solved. Well, hold on a minute. Look what the markets did yesterday. The markets this time yesterday were up almost 400 points. But by the end of the day, it went negative. It was actually down, I think like 130 points. So it's way too early in the day to know what this day is going to look at. But this is the 1 month chart. But I want to show you why I believe we have not bottomed in either the stock market or the crypto space. So to do that, we need to scale out a little bit. So let's start with the 3 month chart. Okay, now you can see that this market has put in a double top over the past 3 months. I know I've covered this in previous videos, but for those of you who haven't seen this before, I want to go over this. Okay, so we can see that a double top was formed, and that is bearish. But now we need to scale out a little bit more. Let's take a look at the 1 year chart. And you can see here that although the market has had a rough month, it is still only about 700 points away from its very recent high. We're still close to the high. So the downside potential is very dramatic. And to emphasize that, let's go back 2 years. And by the way, I like to use this site for presentations because it's simpler and it's just easier to make my points. All right, look at the downside potential. So again, although we've had a rough month, we're still very close to the recent highs in this market. But this uptrend has been broken. And again, to reiterate, if this market does sell off much more from here, it will affect the crypto space. So that is a technical reason why I think the market has potentially a lot more downside to it. All right, so why are the markets selling off? Now, I know I talk a lot about how fundamentals don't matter. What really matters, are the charts. But it is useful to know, why people are selling. I mean, why exactly is the stock market spooked right now? Well, the primary issue right now that people are pointing to are the idea of tariffs. Trump is proposing all sorts of tariffs on countries, and people are worried that could lead to a recession sooner rather than later. Listen, I don't think it doesn't matter what Trump does. I think that a recession is in the cards because there are too many things in the works that are unfixable. I can't tell you the exact day and hour that the financial system is going to collapse, but I'm convinced that it's going to happen. I'm convinced that it has to happen. Get your money out of the bank. I mean, I personally keep like 2 or 3 months worth of bill paying in the bank. Everything else I pull out. And then I take some of that cash, which is a depreciating asset, and I put it into these guys, gold and silver. So other things that I want to remind you about. And the recent consumer confidence survey really spooked the market. It's the biggest monthly drop since 2021. And of course, the confidence survey is an indication of the economy, right? It gives you an idea of how consumers are feeling about the economy. And the idea being that when consumer confidence is low, that economic activity will slow down. And we saw that in some key numbers recently, like in Walmart and Nvidia, which is really spooking the market. I mean, we are in earnings seasons right now. So as we get more and more headlines with disappointing earnings reports and forecasts from different companies, that's going to affect the markets. I believe this is going to be a very headline-driven market here. And of course, bolstering the idea of consumer confidence being low. It's important to remind you of the current credit card crisis in America. credit card debt has hit a record $1.2 trillion for the first time in history. But also, the average APR on credit cards are at a record high. So you have a double whammy there. You have credit card balances at an all-time high at the same time that the average credit card is charging 23%. And people are not using credit cards to buy luxury items. They're using their credit cards to meet their just their monthly needs. This is one of the untalked about stories on Wall Street, on mainstream media that you don't hear about. All right, so let's get back to the crypto markets. All right, so listen, this is not supposed to be happening. I mean, it was just a couple of months ago where people were convinced that this is going to be a brand new world. This is a brand new lease on life for the crypto space. We had a new crypto-friendly president. There was talk of a Bitcoin and crypto strategic reserve. There was talk about how crypto transactions were going to be tax-free. And there was talk about how the SEC was supposed to take it easy on the poor, crypto space. So the entire crypto space was very giddy. They were very excited. There's a lot of enthusiasm. All the people who are already in crypto, they doubled up because they were excited, they were enthusiastic. And people who were on the fence with crypto, they decided to jump in. FOMO was the theme of the day in the crypto space. Well, now it feels like the old rug has been pulled out, which is typical. I'll tell you, having been a trader since 1987, I'll tell you, this is kind of typical stuff, guys. So in the crypto space, what should you be doing? Now, again, I'm not giving financial advice, right? I'm not a financial advisor. This is just life advice. This is just friend to friend, right? It's just you and me talking. Listen, you have to decide whether you're a trader or whether you're an investor. Now, there's a phrase in the crypto space called hodling. Now, hodling is a bastardized way of saying holding. It's you're holding. Okay, so if you're holding, let's be clear, you're not trading, you're investing, which is fine. There's nothing wrong with that. But just don't kid yourself that you're trading. If you're hodling something, you're not, quote, trading it. You're holding it, you're investing in it. Again, I'm not insulting people who hold on, to things long term. The truth is that I've done videos recently on XRP, as a long-term hold, and I bought my XRP at about $1.60 a share. And I'll tell you that when it got to the 260 area, 270 area, I did pull out my original investment. So I've got all of my original money out. So I have nothing left, at risk in that particular crypto. And if XRP does get back down to my original purchase price at around $1.60, $1.80-ish, I'm going to increase my position again on XRP. But I don't know whether it'll get down there or if it'll get down there. But I do think that the coins you want to be looking at, longer term, I mean, Bitcoin's going to be fine. Okay, XRP, XCN, they're going to be fine if you hold on long enough. Okay, but don't be surprised if for a period of time here, they are sucking wind. Now, one way to look at it is as an opportunity, right? As a chance to scale into this guy. I mean, if you think that Bitcoin eventually is going to be worth, $1 million a token, and I do. I think at some point in the future, I think it is going to be worth, $1 million. I don't know whether it'll be quite in my lifetime, but my kids will see it. I think it will get there. So if you have that perspective in mind, if you think, okay, I expect Bitcoin to see $1 million eventually, you're not sweating the current move so much. But if you're already retired and you don't have 20 years, to wait, okay, you have a tougher decision. But for the sake of posterity, let's take a look at what Bitcoin and XRP are doing right now. Okay, so Bitcoin, as of this recording, is trading at 84,000. And what has it done recently? Okay, as I'm talking to you, it's having a little bit of a rally, but that's just a one-day chart. Let's take a look at what's happened over the past 7 days. Okay, so in the past 7 days, it went from the 96 area down to 84 pretty darn fast. But in the past month, you can see that a month ago, it was over 100,000. And let's take a look at XRP. XRP at the moment is trading at 214 a share or token. It's having a little pop here. Let's take a look at the 1 month chart. Now, percentage-wise, XRP has taken a much bigger hit than Bitcoin has. Okay, so just like in the markets in general, when the markets are uncertain or when they're fearful, they sell their riskiest assets first. And again, cryptocurrencies reside at the extreme end of the risk spectrum, right? So it's not surprising that they took a bigger hit than the stock market. But then, inside of the crypto space, they have their own subset. Okay, so the generals like Bitcoin and Ethereum and ACN and XRP, those are the ones that are going to be sold a little bit later. The ones that are going to be sold first are going to be the meme coins and the other altcoins. The generals will bring up the rear. When they start selling off Bitcoin and XRP, then that's when things are getting really bad. Because if they're selling off Bitcoin, they've already sold off all the other lower class coins. Now that process is also works in reverse. When the market does start to recover again, the coins that they're going to buy first are going to be the generals. They're going to buy the Bitcoins, the XRPs, the Ethereum, the XENs. And then eventually the other coins, the other altcoins, and maybe even the meme coins, they'll follow later on. Okay, so listen, if you have a solid crypto like Bitcoin or XRP or XCN or Ethereum, I think you're going to be just fine. As long as you're not leveraged in it, you're gonna do fine. Just be patient. They'll be just fine. I do think that they're gonna recover just fine, but it might take a while, and you might see lower prices before the recovery begins. So just be patient. Try not to look at it so much. Now, if you want to be a trader, this is actually a good market. This is a trader's market. This is not an investor's market. This is a trader's market. But I will tell you that most people who try to trade actively fail. That's because they don't have the discipline and they don't have a real plan. They're just kind of winging it. So, a lot of people who are active traders, they've been wiped out the past couple of weeks because they don't have the discipline and they don't have an actual plan and they don't have the skills to do it. So whereas they might get lucky for a little while and they feel like geniuses, a day is going to come when they are going to give it all back because they don't have the discipline and they don't have an actual plan. My advice to most people who want to, quote, trade is learn how to do it. And that's a long learning curve. So what you really should be doing is find a professional trader and let them do it for you. And I've got 3 programs that you can use to do that. And if you're interested in learning about those, I can't mention them here there are reasons why I can't mention them in a YouTube video. But if you want to learn about those programs, and some of them are doing really, really well, reach out to me, send me an email, and I'll send you a link to the Hey Ed WhatsApp group, and we'll teach you about these programs where you can have other people do the trading for you. I mean, one program that my people are in generates about 4 to 6% a month, like clockwork. Now, I know 4 to 6% a month might not sound like a lot for you, but listen, this is a reliable program. I'm not worried about a rug pull. And if you let it compound, I promise you, 5 or 6% a month compounded, it adds up. You can make a lot of money in a fairly short period of time. Now, that particular program is best for people who are outside the U.S. So if you're watching this from another country, this is really good for you. And even if you are in the U.S., you can still get in. You just have to jump through a little hoop. But like I said, if you want trader type results without doing the trading yourself, I can put you on 2 ways to do that. Please like and subscribe. Ed Anderson, live from Minnesota, signing out.
Copy that.